All right, Lisa, welcome to the Level Up series with the Hair Group. I'm so excited to have you here.
Thank you.
Conversation is long due.
Yes, I'm so excited to be here. Thank you.
You have helped like hundreds of our people over my career, and you're with, you have always, I have always been loyal in our relationship because of how you went about helping them. And
Yes,
I feel like today is a day that we need to share your story with people, how you
right.
made so many impossibles happen. And also just ask you some questions because during this COVID times, market has disrupted, you know,
Correct.
significantly, and for good and for bad. So today I would like to have an open book conversation, as you always
Sure.
are. And
Sure.
so just to start, for people who don't know you yet, share with us like how does your work entail in real estate industry in general? In today's world, like
Right.
your career as a lender, what does that role entail in real estate industry in general?
Sure. So my role technically these days is a branch manager. So I manage an office. I co-manage with another loan officer, and we have about 6 employees. And also, my passion is the originating part of it. I like the mentorship that I can teach other loan officers. But for me, really, the passion is working with borrowers to make their dreams come true, and that's owning their first home or their second home or a lake house or anything like that. So those are the passions that I have.
Nice, nice. Now, you said something really powerful there. You said you're a branch manager. You easily have an option to just mentor other loan officers and not be in the business because everybody kind of they all start with the direct loan and borrower relationship and then kind of go to different roles. And I
Right.
remember the journey, and I've seen you spark the most when you have fixed somebody's issue, like somebody who said, I never get a house, and you're like, no, you can.
Yes.
Tell me about it. What attracted you about that part of the business over just managing a bunch of loan officers?
So the loan side of it is can be a little bit tricky. So basically, you have your initial canvas, I like to call it, where you have somebody fills out an application,
Mhm.
and you're collecting just verbal information. But once you kind of dig into it, you learn a little bit more about that blank canvas. You start to paint the picture. When you're painting the picture, there's certain things that can pop up, and you have to kind of look at it like you're filling in different colors or puzzle pieces into that painting to get to the end result. And that's basically, the loan being clear to close. And there can be challenges along the way, things that pop up that weren't disclosed, and right away borrowers will take a negative um, they'll take a negative side to things and think, well, I can't get this done.
Yeah.
But my mind works differently. You have to kind of step back a little bit to end up, getting to the next step, which is the final result, which is closing.
Mm.
Um, and you have to keep them calm because this is a very difficult process, and their private information is being shown to processors and underwriters, and they can become emotional. So we almost have to play the therapist as well. So we have to calm them down, ask for private information. And there's times when, to me, no is never no.
Mhm.
I see it as, okay, if somebody tells me no, let's look at it a little differently and say, okay, can we change this or can we add this? And we get a yes. So, it can be very challenging, but I like some of that too. I like that challenge of being able to, put that puzzle together and get the borrower into a home. That the end result to me is a happy borrower, and getting them into the home, getting the agent paid, doing the right thing for the customer. And that's kind of our ultimate goal, is to make everybody happy.
Nice, nice. Now, it seems like from your conversation that you're able to almost see, like you were mentioning about how painting the picture or putting the
Yep.
puzzle together,
Yep.
you're almost able to see something that a normal person cannot see if they were to just go through a traditional way of applying a loan application online, right?
Correct. Correct.
So we often start there, right? Often when I have buyers who need help with lending, they most of the times have kind of an idea what their credit score looks like. They have run the online credit karma and stuff, right?
Correct.
And sometimes they have already determined for themselves that they're not qualifiable, right?
Correct.
Because of
Correct.
the news they have heard, right?
Correct.
And it seems like that how you have shown up personally for our people is you always like, okay, I don't care what you have arrived to the conclusion
Right.
for. Let me see it from completely different set of eyes.
Right.
So walk me through that process. Like, what encourages you to do that, and how do you do it? Like, tell me, like, because people probably don't understand the value in it.
Correct.
They just finance is a difficult conversation. You and I both know.
Correct. Correct.
So how do you do it? Like, why does traditionally they get declined? And when you look at it, you like, you got money, you can own a property, you don't
Yeah.
have to pay rent. So how
Correct.
does that happen?
Well, I think for the most part, experience.
Hmm.
If you have gone through several different types of loan, I do all types of loans,
Hmm.
VA, conventional, FHA, USDA, every different type of loan.
Yeah.
So when you think outside the box, and that's basically what you have to do when you are presenting a file to an underwriter, the underwriter's going to see black and white. But we as loan officers have to see a little bit of gray as well, meaning that they might have been with another lender that maybe only had a year or two, less than 5 years experience,
Hmm.
and might not traditionally think about something totally different.
Hmm.
That, basically Social Security, disability income can technically be grossed up.
Hmm.
And so, if somebody's running into a debt to income ratio, other loan officers might not know that that can happen. And so they don't ask a lot of questions. They just basically will say, I can't get it done, because they don't like the difficult files. And and I always look at it like, everybody's thumbprint is different, just like everybody's application and file is different.
It's
But
different.
when you go through so many of them, and have the years experience, then I'm going to know right away, looking at a file, what I can change, what I can make happen. I could do a split MI. There's just all different types of things that you can do to make something happen. And a lot of times too, it's just basically having a cover letter for your underwriter explaining in detail how you put that picture together,
Oh,
and then they look at it like, okay, that makes a lot of sense. If you just turn in a file without explaining something, um, you could get suspended or denied, and then that could cost the borrower, cost the agent.
yeah.
I just like to look at it very differently. And so the challenge of that is, you feel so good when you get to that point and get it done for somebody, and especially if somebody couldn't do it.
I love that. Love that. So let's talk about you feel so good. Like you
Yeah.
said something and I saw your face just spark up. Almost you arrived at the point of underwriting approval in a file.
Yeah.
So let's talk about that a little bit, because I don't think people really get to value enough what you just mentioned here. So let's help people get there. So what you're saying is that if you go to a lender, they ask you a bunch of documentation, your W-2, your tax returns, your P&Ls, your apply for the application, credit scores, and all that good stuff, right? And you're basically saying that someone who doesn't have the deep insight as you have gained or acquired over
Right.
years of experience, they might
Right.
look at a file and give it to just underwriter as is without
Correct.
putting a theme to it or cover letter. They
Correct.
can just be like, denied.
Correct.
Or Uh-huh. Yes,
And
like yes.
yeah, a lot of times too is, a lot of rookie loan officers, they don't know how to read tax returns. They don't realize
Wow.
certain things that can be added into tax returns and what needs to be deducted as well. And so they'll
Yeah.
pre-approve a borrower. The borrower will go and get under contract, and then they come back and it's like, oh, they don't qualify.
Yep.
And
I
then
had
the
a builder do
borrower
that.
spent money. Yeah,
Remember one of our buyers, like a builder qualified the buyer to build the
right,
house in their subdivision.
correct,
And 2 weeks before closing, they're saying we can't do the loan.
right,
Like that's how irresponsible of the work I've seen sometimes. So
yeah.
it's important to have people like you guys in the toolbox. So Lisa, where does that grit come from? Like you have been going on for 16 years, right? That's a
I know,
fantastic
I
career.
know,
Like unless you can't be smiling and doing it. So
yeah,
tell everybody about what you had shared with me about your childhood story. Like who is
sure,
Lisa Love?
yeah. So I was born in California. I was raised by my mother and my grandmother. So very, godly, inspirational. My grandmother was amazing. So I knew at a young age, because I grew up very, very poor.
Mhm.
Um, I knew that I couldn't wait to become an adult so I could make my own money, have my own things. I I've been in sales my whole life, so I've done nothing but sales from the age of 16 and doing retail sales. Um, I learned by that first commission check that I got that I never want to do anything else but sales, and that's kind of the path that I recognize that it feels so good to the hard work that you put into something, that you finally close the deal and you get that check, and you realize, wow, I could put this much in savings. And over the years of just growing that way, for me the grit is not about the money. It's never been about how much money I'm going to make, what am I going to do. I'm driven by serving others. So what makes me feel good is getting to that closing, having borrowers, whether they went through a tough time or it was a simple, easy process, um, they just love the fact that they're there signing on their home. They're going to get their keys that day. I think for me is that to me is more important than the paycheck that's going to come. And
Mhm.
I feel like the more I put myself out there, and I never turn away anybody. I
Oh, you
and
have
you and you know this. I just say, hey, you can buy a house, but maybe right now we need to do a few other things to allow you to get in a position where you get a better interest rate. You can have more buying power. Let's focus on paying down some debt. You set a plan for them, and then they stay with you for a year or two
oh
years,
yeah.
whatever it takes, because you've earned their trust. And that's based on just being considerate and caring and compassionate about their situation. So when I'm talking with a borrower, I always ask them to tell me their situation, because you don't want to just say, go fill out an application. You got to know the story. Once you know their story, then you can put it together. And for
Yeah.
me, it's like we all have a past and we all have a story to share. And I think if you're caring and compassionate about their story, it just makes the process easier. And I think
Yes.
for me, the drive for me and staying, and it's not easy, and staying so many years in this business is the 98% of the people that we help are grateful. You have some 2%, you and I know that they're not very grateful sometimes, but you
Yes.
stick with it. You don't quit. You don't give up until
Yeah.
the end result is they get their house, they get their
Yeah.
keys.
Yeah.
That's why we do it.
Yeah, and you and I now know that we as professionals in real estate and in lending, we must learn how to separate the person from the problem. The
Correct.
person is not the problem. It's just the same person check all the boxes that they're not able to hit.
Right.
They're very joyful people. It's
Yeah.
just they're not liking what has occurred in front of them, and the circumstances are out of their control. So
Correct.
we once we find acceptance in that, it's easy to navigate those
Right.
situations.
Yes,
So
and learning their personality too.
yeah,
Learning their personality, like you say, you always tell me this client has this personality. You need to work with them this way.
yeah,
It makes
yeah.
a difference.
It makes a huge difference because
Yeah.
some people are like to the point. They got 15 minutes, they want to get to the point, they want you to tell. And some people, they do have a lot of concerns and
Right.
they need some help thinking outside the box and some courage to
Right.
do that. So
Right.
let's talk about something very important here. I know this is going to be a non-conventional lender realtor conversation, but hey, that's why it's level up, right?
Yeah.
So let's talk about how you earn your pay because
Yeah.
I want to make sure people understand that as much as she gets rewarded or you get rewarded
Right.
on going seeing a loan go through and seeing the closing happen, we have to remember that you only get paid. You only get your earnings when you
Right.
get the job done,
Correct.
not for all the hours you have put in,
Correct.
not per hour, not bonuses if you went overtime.
Correct.
And there's no deduction if it happened quickly because you were smart enough to get it done.
Correct.
But it's all dependent upon delivering the job.
Correct.
So it's possible. Is it possible that you have worked numerous hours where that didn't amount to anything?
Correct. Correct. And that's true. And so
Yeah,
basically, um, back when the new TRID guidelines changed, the regulations changed to say, okay, we're going to set a loan officer, let's just say 1% commission.
yeah,
It used to
yeah,
be where you charge an origination and so forth. You can make as much as you wanted back in the day.
yeah,
Now there is let's just say a 1% commission.
yeah,
We are paid by the company. We don't charge the origination to the borrower. That's
yeah.
not how we're paid. We're paid once a loan funds, and we're paid not on the contract purchase price. We're paid on the loan amount that we're lending. So, for example, if it's a $250,000 purchase, $200,000 loan amount, I'm paid on the loan amount because that's the amount of money that we're lending out. The company then pays my commission after funding, usually 2 weeks after funding. So we could be spending 45 days on a loan, and for some reason if they pull out or they go somewhere else, then all of that time that we've spent on it, we earn nothing.
Mhm.
And that
And
includes.
sometimes you're working with the client over 8-9 months in helping them fix the credit,
Correct. Correct.
and it
And
can
they.
amount to maybe just a $1,500 at the end sometimes.
Correct.
Yeah.
That is
And we're
correct.
okay with
And
it, like
yeah.
because that has never been the motivation. Otherwise,
Correct.
this industry wouldn't be helped enough.
Correct.
Yeah,
But there is such a thing called a 6-month buyback. The majority of the lenders, once they they close and they sell the loan, if the borrower pays it off early, we have to give our commissions back. So
wow.
that has happened in the past, and it was a very challenging, difficult file, but then they sold a different property and paid it off, and I had to give all of my commissions back. So
Mhm.
not only did you work really hard on the file and you got it to closing, but you got paid nothing. So
Wow.
those can be challenges too. So I always tell my clients, if you're going to pay it off early, you might seek a different type of financing, because I would work for free. And we all know, I mean, we want to get something for our efforts and our knowledge and everything that we do. So, I just say, please keep it 6 months before you
Yeah.
refi or pay it off or something.
Yes.
Yeah.
Yes. That's fair enough. That's fair enough. And so let's talk about lending your craft. I know
Yeah.
so many people are going to be so curious to know some of the very famous terminologies that have occurred in last 60 days:
Yeah.
forbearance, deferment,
Yes.
forgiveness. So
Yes.
I'm going to talk all about that. Now, before we get into it, um, what would you say would be the top three things anybody can do? Top three things to position themselves if they're looking to purchase something in next 3 to 6 months.
Okay.
What are simple
You
three things they can do?
Well, first of all is, knowing your budget, knowing what you can afford, um, knowing what your credit scores are, whether you keep track. Credit Karma can be a good gauge, but that doesn't represent a FICO score. So
Yeah.
kind of gauging what your credit scores would be.
Mhm.
And then third, I would say, maybe if you have, some credit card debt or some things that are, out there or lingering, or you might have some, some collection accounts, knowing what those are, and either, if they're not old, settle with the collection, get a deletion letter so you can get that removed, maybe pay
Mhm.
down a little bit of credit card debt so it
Mhm.
boosts your scores. Anytime that you have a good credit score over 720, you're going to get a good interest rate, especially right now.
Yes.
So those would probably be, knowing your buying power, knowing, what your credit scores are, and then, possibly cleaning up some things or paying off some debt. Those are things that people can do now before they start the process.
Or maybe just simply call somebody like you and
Yeah.
everything is taken care of, right?
Or call me and I'll just give you some advice.
Yeah,
No,
right.
yeah. I
Yeah,
mean,
because doesn't that happen? Like, no, this is what people normally think. They think, oh my God, does loan application cost me money? I said, no, it's a health check on your finances. Let's
yes,
get it in so quickly we reveal it. So
right.
all three things you
Well,
were mentioning, Lisa, they can get it done if they call you and file an
yes,
application, right?
yes. And there is a misconception because people think when they fill out an application that's going to cost them money. They don't pay anything until they get to closing, with the exception of an appraisal. So it costs them nothing for a credit check. And what's really important is what I feel is, if you're going to shop for a mortgage this year, we're in June. If you're going to get into a house this year, my suggestion is to start at least 5 to 6 months early. So even if you're not going to make an offer until maybe September, October, as busy as everything is, it's taking 45 days to close on a purchase. So, and if you're in multiple offers, it could take you a month or two to find a house. So knowing what your buying power is, early really, really helps. And plus, if the idea is to buy a house this year, it doesn't hurt to get the process started. So if there's any changes that come or something they need to pay off or boost credit scores, they're well in advance of their goal to get that done early.
Got it. Got it. So basically, just because, uh, actually, that's really true, Lisa. You know why? Because a lot of time people come to us and we have done the bar consult with them. Of course, we are going to direct them in the right direction. But
Right.
even after you've done a consultation with the realtor and you know what to expect, how to buy, how to negotiate, what to pay for it, we still have to pause the process of search until they get qualified with you,
Right.
because in that criteria of the price point, we have to put a number.
Right.
And we certainly don't want to put a too high of a number and then shot the expectations down,
Right.
or put too low of a number where they can actually find something very reasonably in just a little bit of a higher price point. So
Correct.
ultimately, they have to come to you guys on the buy process no matter what.
Correct.
Lending is a starting process.
Lending has always been a starting process, but I would probably say 7 out of 10 times that's not where borrowers start.
They don't.
They they go find their agent and want to look at houses before they even know that they're qualified, how much they can afford, because they're always going to tell me that, oh, I only want to spend $1,400 a month. Well, not in Austin.
Not in Austin.
So they have to really kind of know what is it going to cost them
Yeah.
monthly before they get out there and just meet with an agent. And
Start looking
and
at.
it's okay if they still meet with an agent, but I don't ever recommend taking anybody out until they have their qualification letter in hand, and maybe even for self-employed borrowers that I've reviewed their tax return, because they don't understand. They could tell you verbally what they gross in their gross sales, but lending has to go by a net income.
Operating income. Yeah.
And there's things that can be added back in, but if they don't know that, they're just going to tell you verbally what they make, and that's not the truth.
Yeah.
So before they get out there to shop for self-employed borrowers, I always review tax returns.
Tax returns.
Yeah.
And let's talk about a little bit, like, a lot of self-employed people, they have established very good businesses and they have really good income.
Correct.
But their net operating income did not support the price point they can actually afford. The reason is the way accounting is done. When you're taking your own self-payroll like that, or you have your family members work for you as well, we might not show that much profitability on the paper, although we feel pretty equipped, because it allows us for better taxes. And that might not support our price point to buy, because you have to show great income, which may cause great taxes for you to buy a great home.
Yes, that's a lot of greats, and that's true. So basically, and a lot of clients don't know that, because the rule from conventional traditional financing is, being self-employed, you get to take advantage of those tax write-offs, which is amazing.
Yes.
For your tax burden, and that's why a lot of times people will become self-employed.
Yeah.
The problem is when you write all those expenses off and you have a net income, well, you still have your gross receipts, but you have your net income. Then the government says, well, on paper, you don't make enough. So, they either would have to wait next year, file higher taxes, file a higher amount of income, pay the higher taxes. That's why Angel Oak is an amazing company, where they do bank statement loans. So this helps a lot of borrowers that are self-employed. We collect, 24 months of the business bank statements, and we qualify you based on your deposits.
Not the net operating income, not the P&L, just the deposits.
Correct.
Okay.
Yeah, business deposits. And so we will qualify you on just that. We don't collect tax returns. It's a non-traditional type of a loan, and it's available for self-employed borrowers that have, the 2 years, self-employed. And as long as you have those 24-month bank statements, and the income will go up to 50% on the debt to income ratio for those business, bank statements, those borrowers. It's amazing that, you don't have to have the tax returns, and they still get to qualify. So they don't.
Because they trust in the cash flow business is producing.
Correct. They are. And they don't have to go and amend their taxes, pay higher.
They're probably taking an average of, on an average, what percentage of small businesses net as a profit. And even if they are doing the write-offs, they can kind of average it out. But they have just a slightly higher interest rate, but you can still buy a home.
Correct.
Rather than throwing 100% of the money in rent, you can still buy a home at a little bit of a higher interest rate. Once you have a greater tax returns, you can actually refi it, right, Lisa?
Yes, you can. Yeah. And, once you've paid down your principal balance and, maybe paid off some debt, etc., then you can refinance and get into a traditional loan, as long as the income then is there. And that's something that we work with them, not just in the beginning phases of the bank statement, but we let them know, hey, in a couple years, you can always refinance this and get it a little bit lower. And it might be, 1 to 2%, a little bit higher than traditional interest rates. But when you're throwing away, thousands of dollars a month in rent, I'm not going to complain. I'm a landlord too, but for the borrower, that's assets. That's money that they can be putting towards their property and gaining that equity and having an asset for them.
Yeah. And mostly when I have mentioned this to people, and we always do an analysis on the paper. As I look, let's do numbers to numbers. Numbers don't lie, right?
Right.
Often people say, well, my constraint is that, or my understanding is that we have to pay a lot of property taxes and insurance. Great. Even if you're paying property taxes and insurance, number one, correct me on this, you can write them off on your tax returns. That's number
Correct.
one benefit.
Yes.
Second, if not 100%, at least 60 to 70% at one point, or 50 to 70% of that payment will start going towards your equity.
Yes.
And okay, you won't get the 100% of your check back per month on the rent, but you will get 50 to 70% of it back,
Correct.
which is pretty good than zero, wouldn't you say so?
Yeah. Well,
Yeah.
and plus you're getting the appreciation, you're paying down the principal balance.
Yeah.
There's no prepayment penalty, so you can pay additional principal balance to actually help the amount of financing that you're paying over time. So, and right now, like you say, interest rates are historically the lowest that they've
Okay,
ever,
so
ever been.
I really want you to a little bit expand on that. COVID happened March 15th, shelter shut down, things
Yeah.
changed all abruptly. And I
Yeah.
know you're a lender who has been through a lot of changes, 16 years. You have seen it go up and down, right?
Yes.
So my question to you is, in last COVID times when things went so up and down, great things happen in lending,
Yeah.
very uncertain things happen in lending too.
Correct.
Interest rates got historically low, as you're saying. Money became really free. People can qualify, all the reasons to buy, but it got tighter. And at the same time, once it got tighter, it also canceled a lot of people's buying and moving plans too, where they had to now consider deferment. So could you please expand to me all the goods of buying and lending during this, and what not to do? I really want to clarify the stigma around, or the optimism around deferred payments.
Sure. So I'll first start with the good part about buying and refinancing.
Yes.
Interest rates for all types of loans, not our non-QM and bank statements.
Yeah.
Traditional lending, we are at historical lows. Like I've never seen anything like this, even in the 2008 mortgage crisis, where rates came down.
Yeah.
But for a 30-year, traditional loan to be 3% or lower, depending on credit scores,
Yeah.
I've never seen it. So that is a great thing. But when COVID happened and the stock market and, all this stuff transpired, lenders, the servicing companies of those got really scared, because it becomes a risky type of a loan to lend on either lower credit scores or is the job secure? Are they going to put their loan in deferment once they close? There's new forms that came out saying, if you close on your house, if you put your loan in forbearance right after you close, you could be sent to, a credit issue,
So the buyers who bought the properties, and if something happened during COVID and they're asking for forbearance right after they buy, it can impact their credit.
It can impact their credit score. But there's documents that say that at closing that they have to sign. Now, if they, the downside to the whole COVID thing was the borrowers that were already in the pipeline with lower credit scores could not qualify at that time anymore, because all the banks, they raised the credit score buying power like 60 points higher, and it made a lot of the borrowers no longer qualify. The good thing now that things are kind of easing up is those are kind of coming back down. So we're seeing good progress. Like we're back down to 620 on credit score for
very nice
FHA and for VA. So a lot of that has changed. The issue with forbearance is the fact that, and now if you have your loan in forbearance because you really lost your job, it's not going to hurt you. They're not going to report you to the credit bureau. If you decide to sell your house and get another house, It's not going to affect your credit scores. You will still be able to do that, okay?
Mm-hmm.
But you have to be a little careful when you first started the forbearance, because you have to read the fine print of what you're doing, because there are fees and you don't get to save, the interest is still
Oh,
recurring.
that's what my question was. So
Yeah,
even if you don't make the payment, the interest still is due.
correct.
Hmm.
But you have to look at who your servicer is. You have to find out from them. And anybody that's put their loan in forbearance, even right now, that's even seeing this video, it's very important to go back and look at your agreement. Look and see what you signed, because come at the end of July and August 1st, when all the payments are going to come due again, if you signed a document saying that you're going to make everything up on that fourth month, you have to bring all that money to closing, and you have to pay the fees and the monthly payments within that time period, or they do have a right to start foreclosure.
Hold up,
Um,
hold up. Let's go
yeah,
back here. I don't think people understand this.
yeah,
So you're saying the forbearance and all the deferred payment during COVID, if you lost your job and or your job is affected by COVID temporarily, you can call your bank and ask for forbearance for a month or two. And if you asked for forbearance for the month of April, May, June, it is
right,
quite possible in July or August, those payments you didn't pay are coming due in full amount?
correct.
Hold
It
on. So
depends.
how does
Yeah,
bank expect people to pay that
well,
money?
exactly. So it depends on the servicing company. Some of the banks are putting it on the back end of the loan, and some of them are not. So
Okay.
you have to figure out, what are you going to
Because
do to
at the
get the
end is
money?
still better because if you were to ever sell the property and you feel like this is not something you want to hold on to, at least
Correct.
you're only due at closing. You can pay it out of your equity. But if it's
Correct.
due, otherwise they're going to foreclose. That's a very different. How many
That
percentage of the
and
banks are doing that?
I
That
don't
is,
know. That's going to depend on the borrower, and if the borrower got confirmation and signed an agreement that said it's going to go on to the end of the loan. If not, then don't be surprised, borrower, if all of a sudden in August you have the full amount due. The problem with the forbearance is, now if you were late at all in your mortgage prior to putting it in forbearance, then you are not going to be able to get another loan at that time until all those late payments have seasoned for 12 months.
oh my God.
So,
Okay. So if you have missed payment, if somebody has missed payment on their house,
right,
uh, payment on their house, and now they're asking for forbearance.
right,
And let's suppose somebody missed on a payment on a house because of some personal reasons
right,
last November and December, right?
correct,
And
right,
now because of COVID, they're asking for forbearance. Although forbearance might not count against you if you were to sell and buy a new home, but
correct.
the fact that you have a later payment in last 12 months without COVID will be the lone reason why you can buy a home.
Correct. Now, there can be some leniency with that, with a strong letter of explanation.
Yeah.
This is where knowledge and expertise and having that experience comes into
Cover
play.
letter, the cover
Yes,
letter.
yes,
Okay.
yeah, because maybe something happened, their auto draft, whatever. But if it's consistent and it's one payment and then 2 months later it's another payment, then you're going to have a hard time getting qualified, because, not only were you not making your payments, but maybe then you put it in forbearance. And to be honest, the servicing companies cannot ask for reasons why you want to put something in forbearance. You don't even have to explain that you didn't even have to lose your job in order to put something in forbearance. So you could have
Hold
still
on.
been
So
employed.
lenders
Yes,
were okay with putting the loan in forbearance, even if you haven't lost your job.
correct. That COVID did not affect you. If
That could
COVID
be
didn't,
detrimental to people too, because all of a sudden now you're due for 4 payments in 1 month
right, right.
and you've not
And
allocated your resources right.
correct, correct. And so we as lenders were not allowed to ask, if they've lost their job, or if they, if somebody wanted to put their loan in forbearance, they did not have to prove at all that it was from a job loss. So
Wow.
some
We should
people
be,
just,
yeah. So
yeah,
just to the listeners out there, if you can make your payment, make
make it.
your payment.
Yeah,
That's the best thing to do.
yes, yes, very
Yeah, get your
important.
utility
Yeah,
bills or other bills to be forgiven or delayed before you
right.
touch the mortgage, because this can come bite you
Yes.
in 4 months or in a year or maybe towards the end.
Yes. Yeah. And so you have to just do your research too with who your servicing company is to find out, okay, what's going to happen when I have to start making my payments again? Is there something for me to sign that says this is going on to the end of my note? Is my note date going to change, or do I have to make the full payment, once the forbearance is over with?
Yeah, and there's one more thing I don't think listeners understand. Banks, if you miss payments out and you're pushed to foreclosure, banks will start something called loan modification. And
Correct.
not everybody qualifies for it. Could you tell people about loan modification? Like, I don't want to have a generic version.
Yeah.
What is loan modification? And I know people are under the understanding that my payment will go down or become affordable, but there is money still to be owed. Could you please tell about
Correct.
that?
Sure. So a loan modification is a little bit different than forbearance. So forbearance, you don't pay your payment at all. A loan modification is basically, let's say one of the borrowers lost their job. They would, of course, call their servicing company and say, so and so lost their job. We need to remodify, which means we need to get a lower payment.
Yeah.
So we're not going to be able to pay a full payment. So we need to renegotiate, and let you know what we can pay. But, and that happens, but the interest, the principal, the amount that is being reduced does, can go, if they get approved for the remodification, you have to send in documents, proof that you can't make the payment. It can take months. And to be honest, you have to be late before they'll even remodify it. So
Yeah.
now your credit is already hit. A
Yes.
remodification is different than a forbearance. The forbearance, you can't hit the credit report for the forbearance, but for remodification, they won't even look at it unless you're behind. So once you're behind on your mortgage, then you can start the negotiation of loan modification. Problem is it can take months and months and months for that to happen.
Yeah.
And you're still not making the payment, and interest and everything is accruing, and then you could get denied
And
if you
then
get
foreclosure can start because now you wasted 4 or 5 months with loan mod, right?
correct. And if you get denied, then that's the same thing. A lot of that happened in 2008 when the remodifications and the foreclosures were happening, and people all of a sudden were losing their home, not even realizing, the full extent of it. So you have to really read up, do your research, find out what the servicing company is all about and how they handle that. It's very important.
Lisa, it almost seems like from your conversation that if you're in a trouble with financing with the bank, any solution that's offered by the bank is not in borrower's favor.
Um, no, the
Like,
bank is there to protect themselves.
yeah,
So,
they're like, okay, do loan mod, but I'm gonna,
right,
yeah, still foreclose if you can go
right,
through it. So they're
right,
protecting their money completely. So it
right.
seems like a borrower can only be protected if they have somebody who can advise them or actually make sure they're not buying something that they're not supposed to buy from the very beginning.
Correct, correct.
Wow. Wow. Well, that just
Yeah.
describes how responsible, your line of work is, what a great responsibility on the shoulders. And we sincerely need out of the box thinkers, somebody
Yeah.
who can connect. Cool.
Well, and that's the thing with educating. You have to educate the borrower
Mm.
throughout the process, whether they, are not in forbearance. You have to educate them,
Yeah.
each step of the way. Even, make sure they file their homestead exemption,
Yes.
because that protects them for the increase in taxes. And there's just so many things that you can educate them on how to save money.
Okay.
So it is very important to be with somebody that is experienced, local. I mean, you have a lot of internet type lenders that,
Yeah.
and some people, that's okay if they're a perfect situation. But I always say that no situation is perfect. So stay local if you can.
Yeah,
Makes a lot
staying
of difference. Yes.
absolutely. Now, on the closing note, Lisa, anything you want to leave us with? Anything that you think people should know about you or maybe lending in general?
Well, I would probably say that for me, like my mission is service. Okay. You know, you can have good interest rates, you can have really good products, which those are amazing. And I will say that we have great products and great interest rates. Service is very, very important because that's going to get you to the end. Having that service that, you know, I have a team, we over communicate. We want to let our borrowers know where they're at each step of the way. If there's a problem, we pick up the phone, we call, we reach out. We really work to get a solution to everything.
Mhm.
So for us, service is big. And then just really, you know, being compassionate and working for the borrower. My client really is the agent. So you're my client. I work for you, and then your client is the borrower, and then I work for the borrower as well. But you're really my client. And so for me, my goal is to take care of you, your team, make sure we're communicating quickly.
Yeah.
And I think that's really, really important.
And you guys do a phenomenal job with that. Like we almost are more confident in our community, in our sphere, in our people we know, just because the fact we know we have some really intelligent people behind us, and people need to know about them.
Right.
So our job in buying side of real estate is impossible if lending is not there.
Yes.
So our job, yeah, we literally are 50-50 of the whole transaction. Like we bring the house that they can buy, but we can't do it without the lending part of it.
Right. Right. And I think here locally, Rosie, and you know that,
Yeah.
I mean, it's a great time to buy. Like it
Yeah.
really, I mean, I can't even say how we're super busy with refinances and purchases,
Mhm.
but I mean, for this generation to be able to buy a house, the price is right, the rate is right.
It's free
Um,
money.
I
It's
mean,
free money.
basically free money. I mean,
Yeah.
it's like an auto interest rate. I mean, it just stretched out a little longer. But
Yeah.
but really, it's amazing to see this generation,
Yeah.
you know, be pre-qualified and get out there shopping for their home, and you know, I mean, it's wonderful for them, you know, to
It
take
is.
that step.
And I think,
Yeah,
would you correct me on this if I am saying any differently? A lot of people get stuck in, oh, I got 3.125, I got 3.25, I got 3.45. And when I bring it down to like, your average only going to say is in a house from
yeah,
7 to 9 years at the max, 5 to 7 on an average.
yes.
That's such a small amount. Like, doesn't even
Yeah.
like matter per month, you
Doesn't.
know?
It maybe is $6. So
There
it
you go,
doesn't matter.
$6. Yeah,
Yeah,
doesn't
I
matter about
mean,
$6.
my first house was 7% interest rate. So, you know,
7.25. Yeah.
yeah. So anytime, I mean,
Yeah.
really, rate doesn't really, for most people, rate can be the, you know, deciding factor, but for the most part, service is really important. But knowing what somebody's monthly budget and their comfort level for payment, that supersedes what the rate is, really,
Yeah.
because most people
Exactly.
say, I want this, you know, payment amount. How can you help me get to this payment amount? Okay, buy a little less house, or we look at, you know, doing something creative with the mortgage insurance or something. But if the rate is comfortable for them, and that's what the daily rate is, and they're happy with their payment, lock it in. I don't recommend gambling with the rate. If they're,
Yeah,
you
because
know,
it's so marginal going up and down.
it's
Because in the
so
long scheme of
marginal.
things, it doesn't matter. Making a decision while things are still good is more
Right.
important.
Well, because if the rate does go up and you miss it, you can't go back in time. But
Yeah.
if the rate if you're locked in and you still have a couple weeks and rates drastically lower, you can float down. You can always take advantage of something that's a little bit less if it's a drastic change. But if it
Yeah.
goes against you, you can't go back in the past. You're stuck at the higher rate. So,
Nice.
if you're happy with it, lock in.
You're happy with the interest and you're okay with the payment, lock it
Yeah,
in. It's the
lock it in.
combination of both
Yeah.
that you're okay with.
Yes.
Got it.
Be safe and not sorry.
Be safe and not sorry.
Yeah.
It goes to lending too, right? Well, Lisa, this was, I don't even know where our time flew. Like I was immersed in the conversation, and thank you for pouring so much wisdom today. And I really, really, it is my commitment that I get more and people aware of their options through people like you guys. So not, our goal is people should not slave away their life just paying rent and not owning
Right.
anything. You know, it's a wealth. Everybody
Correct.
has this right to own the property, and they must give it a shot. So
Correct.
I thank you
Yep.
so much for
Thank
your
you,
time.
Rosie. Thank
Thank you for helping
you.
serve so many families.
Yes.
We love you.
Thank you.
And,
Thank you for
look
having
forward to
me.
seeing you in person.
Okay.
Okay.
Awesome. All right.
All right.
Bye-bye.
Bye-bye. Huh? Bye.